Hello, we have recently published the paper The Gender Gap in Bank Credit Access in the Journal of Corporate Finance. The goal of this study has been to verify if there is less credit access to female entrepreneurs and to identify if this is due to some kind of discrimination by credit institutions. There are three main theories of discrimination that we tested: the test-based discrimination, statistical discrimination, and implicit discrimination.
Imagine first that there is no difference in the credit quality of both male and female entrepreneurs, and that banks do not discriminate. The likelihood of getting a loan should be the same for men and women. What happens if we are in a situation of taste-based discrimination? Even when there is no gender difference in credit quality, banks would ask for higher credit standards for female entrepreneurs, and as a consequence, they will be less likely to get a loan than men. If there is statistical discrimination, female entrepreneurs are less likely to obtain a loan even though banks are applying the same credit standards, because female entrepreneurs have lower credit quality. Finally, if there is implicit discrimination, banks think that they are applying the same credit standards and that the different likelihood of getting a loan is consequence of the lower credit quality, as in the statistical discrimination. But this perception is due to an unconscious bias in the assessment of the credit quality. So, although banks think that they are applying the same credit standards, due to the assessment bias, they are applying double standards.
So we have looked for all companies created in Spain between 2004 and 2014 and selected the 80,000 ones that have only one administrator and at least one employee at the end of the first year. Then we use the credit register of Banco de Spain to do three analyses. First, if those companies have asked for a loan. Between 30 and 50% of companies ask at least one bank for a loan in the year the company is created and less in the following years. Female entrepreneurs are between 10% and 25% less likely to ask for a loan, and this happens all along the company life cycle.
Why do they do this? Well, some people may argue that this is because they are more risk-averse and prudence tells them not to leverage the company. Others argue that they are not more risk-averse, they are just anticipating their rejection, so why to bother? We do not have enough information to select one or the other.
What we can do is to look at who gets the loan once one has been requested. We also obtain this information from the credit register. So for each credit demand, we observe if the company got a loan or not. In the year companies are created, when the credit is more demanded, firms led by women are 10% less likely to get one when they ask for it.
Differences by gender in credit access are not significant once the company has a financial record. Differences are significant when the only information available for the credit scoring is the entrepreneur personal information. Taste-based discrimination can be ruled out because the reduction in credit access is not permanent. But there could be traces of either statistical or implicit discrimination. How can we disentangle them?
We look at the credit performance. For those loans obtained, we check for the following years to see if any of them goes into default. What we observe is that companies created by a woman, when they obtain a loan, they are 14% less likely to go into default. This only happens in the first year, precisely when they have tougher times to obtain a loan.
If there were statistical discrimination, since the credit standard for giving the loan are the same for men and women, there should be no difference in credit performance. But in the case of implicit discrimination, there could be an unconscious double standard. Although women would get less credit, those who get it would have better credit performance. This is what we observe. Implicit discrimination is uneconomical and unwilling, but the solution is straightforward. To be known is to be solved. Tell it to everybody involved in the process. Hope you enjoy reading the paper.